Hi, everyone. I hope you're having a very good start to the week. This is Mike Sheehan from financialprof.org. I wanted to take a few minutes to talk about one of the things that comes up a lot when I'm talking to people about getting their life insurance in order. And it's usually, it depends. It could be both the husband and wife, but most of the time I hear it from the husband. And the husband's comment is, I have life insurance through work, which most people do. The thing about it is very few people, I hope this isn't you, but very few people understand what that means. And even to a greater extent, have no idea what the amount of coverage there is. Most work plans will provide you with one time your income. And then I'll have some people who'll say, I have 5 times my income. My question to them is, well, what is that amount? And they go, I don't know, because they don't know what it's based on. If it's based on a base salary, if it's based on a fixed amount, maybe it's 5 times of $10,000, or maybe it's 5 times of your income, which let's say you're making $60,000. Now you have $300,000 of life insurance. But folks a lot of times don't know that. So that's always my question. You need to talk to HR and find out exactly what you have, because you don't want that surviving spouse to find out after the fact that what you guys thought you had was not what you had. And it's usually not a good outcome. I had a client once who had a policy through his employer, and he just had purchased a very small policy, like a $10,000 policy, kind of to provide for final expense, knowing that he had this large policy through work. He proceeds to retire and had reached the age of 70. I get a phone call from the wife. The wife says, yes, my husband passed away. I wonder if you can help me out. I said, sure. So we processed the $10,000 policy. And then I did a little legwork to find out more about his policy through work. Well, unfortunately, I had to call her back with some very bad news. His policy at work through his employer had expired at age 70. So he didn't have any coverage at work. And in his mind, it was going to be a pretty substantial amount of insurance. Now, a couple of things could have happened here. One, they may not have been notified at all. Or 2, he may have been notified, just didn't pay any attention to it. Or 3, it could be a combination of the both. He may have gotten a notification, didn't pay any attention to it, or, whatever. But again, not a very, very good conversation to have that I had with that spouse. She definitely was depending on that large check, which she did not receive. So, is it a benefit to have insurance through work? Absolutely. A lot of times that you're paying very, very little for it. But the options that you want to, and the process that you want to go through as you get close to retirement, is find out, is this policy convertible? Meaning, can I take it over and pay the premium and keep it? Is it not convertible? Does it just stop at the point that I stop employment? Or like in this case, does it stop at a certain age? And anyone that would just let it go, you have to wonder why. Why did they just not want to find that out? But most of my clients, I insist so that I have it in my records that they find out the parameters of a policy through their employer. Because again, nothing could be worse than having a surviving spouse find out something that they were dependent on from a life insurance standpoint and that they're not getting it. So if you are in that situation, do a little research, a couple of phone calls, confirm it with an email, get some type of paper confirmation that you can put with your other important papers that this is the coverage that I have through my employer and this is how it works. Now, folks that understand this, they will very well, and subject to budget, purchase their own policy so that they know exactly what's happening with that particular policy, whether it be a whole life, a universal life, a term policy. I've been reaching out to some of my clients here that had a 20-year term policy, and it's now 18, 19 years old. And, I'm starting to reach out to them, say, hey, you got about a year here before this policy is going to stop or it's going to increase in premium. Again, some tough conversations, because if they want to continue it, it could be prohibitively more expensive because now you're 20 years older. But at least they know, and they're able to have peace that either they've purchased another policy if they were in the position to do that, or understand that, hey, that coverage is no longer there. And both me and my spouse know about that and are aware of that at the point that one of us passes away. So again, do your homework. It's too late after a person dies. If you'd like to talk with us and kind of review those types of things with you, certainly reach out to us at financialprof.org. So until next time, make it a great day.